some beginning farmer products and some services that we offer to people that are entering into agriculture, and then also some tips and tricks for people applying for credit for maybe the first time, and giving you a little bit of the lender's perspective as to what to have prepared and what kind of we're looking at when we're making our decisions. Next slide. So one of the probably most well-known programs that we have for young beginning farmers is what we call Farm Start. So this is a program that was developed with the goal to provide startup farmers and ag businesses financing who most likely have limited financial resources. It's their first time getting credit or pursuing any sort of lending. Typically, these applicants are in their first 3 years of business, and we can do an investment of up to $75,000. These can be structured in different ways. They can work as a line of credit, or you can just have it as a term loan, but the repayment has to remain at 5 years or less. And when you become part of Farm Start, you get assigned a farm credit advisor, who would be myself or one of the other loan officers in the branch, and you would work closely with them to grow your business, and they would advise you to help you align better with your business plan. Next slide. So the application process for Farm Start is a little bit more lengthy than what you might find for conventional financing. So first, we're looking for a business plan, and that would outline what your business's goals and objectives are, and also would outline what research that you've done in the industry that you're looking to enter into and what you think your market is going to be. Additionally, we look for a projected income and expense for 3 years of operation for the business, for you to really dive into where you think you're going to generate the most revenue and what you're projecting your expenses to be. And we're also looking for a projected monthly cash flow, which would show what income you have coming in month to month. And this is especially important for seasonal businesses, such as a greenhouse or another business that really only has a few months out of the year of operation. So we're really looking to know what your cash flow is going to look like for the entire year to see what your repayment ability is. And then also we contact 2 personal references to discuss your application and get kind of their take on your business plans and what they know about your work ethic and things of that nature. Next slide. So ultimately, our goal with Farm Start is to grow your business with you. And at the end of your time with Farm Start, we actually look to graduate most people to conventional financing. So our goal with Farm Start is to really get you guys building your business and generating revenue that would then qualify you for conventional financing down the road. And additionally, with Farm Start, you get provided with CenterPoint software, which is an agricultural record-keeping program that will help you guys keep better records and help you guys really hone in on your business and grow. Next slide, please. Another program that we offer is Generation Next. So this is a series of seminars that are held virtually that enhance management skills and business knowledge. Additionally, with this course, you get a computer-based course that has some activities and homeworks that helps you guys really understand the topics covered by the program. So this is really targeted at people who are entering into more of a managerial position. So it would be typically someone who is a child of a farmer who is kind of the next generation of operator, and they're looking to really learn some of the management skills and business knowledge that they may not learn in the day-to-day on the farm. Next slide, please. So like I said, this is targeted towards our producers who are ages 25 to 35, who are going to be the next generation of operators on a farm. The goals of this program are to help those people identify areas for personal growth and development, also to help you acquire some tools to help you manage your agricultural business, which is typically uncharted waters for a lot of people in Generation Next. And it also provides you with a really unique opportunity to network with other young people in your industry, and which networking can serve you really, really well down the road. Next slide, please. So how do you join? It is a program that's held every year. Unfortunately, it's closed for 2022, but you can email your local branch office for more information on the 2023 program, and my email is at the end of this slide deck to have for contact. Next slide, please. And we have also a Young Beginnings Small and Veteran Incentive Program. So this is designed to help this growing customer segment get started in agriculture. So our incentives include discounts on a lot of our services for a period of up to 5 years for people who meet these criteria. And I break this criteria out in the next slide. But some of the incentives that you would be getting would be discounts on farm accounting and management software, tax preparation, consulting, appraisal. We work with FSA, which you'll hear about more from Peter, with some discounts on the guaranteed loan fees and also some interest rate assistance. Next slide, please. So a young farmer in this criteria is someone who is 35 years or younger as of the transaction date. The beginning farmer we consider to be someone who has 10 years or less of farming experience as of the date of the transaction. And a small farmer would be someone who has less than $250,000 in annual gross sales of their product. We also offer this to veterans. So anyone who has served anywhere in the world since September of 2001. Next slide, please. And our last program that's really geared towards young beginning farmers is Harvesting a Profit. So this is a profitability guide, which is an actual booklet that is available through Farm Credit. And it's targeted to students or farmers who are beginning a career in production agriculture, who may not have as much exposure to financial analysis, management, marketing, and economics. It explains how to measure your profitability, and it also emphasizes the positive side of agriculture. And this link here at the bottom is where you can go to fill out and request your copy. Next slide, please. So just to give you guys an overview kind of what a lender is looking at when you come to the office and are asking for a loan. So in the next few slides, I'll break down kind of what we look for. So our first thing is kind of the difference between conventional financing and what we call equity financing. So equity financing would be startup capital. It's pretty high cost, and that's usually for people who have maybe a higher risk of failure, and it usually comes from self, relatives, or an angel investor. Then debt financing is relationship financing. So we finance ongoing operations and expansion, and it does not dilute ownership. And this is where most of your conventional banks live. So traditional lenders like Farm Credit and banks don't really finance startups. Now, we do, of course, in the Farm Start program, but on a larger scale, most banks do not. So next slide, please. And there's many options available. Like I said, Farm Credit, the Farm Service Agency, seller financing, other commercial banks, some angel investors, capital accounts, and you can even look at some community development corporations and economic development agencies for financing. Next slide, please. So what we're really looking for at Farm Credit is what we call the 5 C's of credit. And anyone who's taken any sort of a finance course typically has gone over this, but those are character, capacity, collateral, capital, and conditions. Next slide. So character, really with character, what we're looking for here is a credit score over 700. And what that tells us is how you pay other lenders. It also gives us an idea of how much existing debt you're carrying and how much more you could potentially take on. Something important to know is to keep track of what is on your report. There are mistakes made. Sometimes things end up on a credit report that really shouldn't be, or sometimes they're inaccurately shown. So it's really important to keep an eye on your report and make sure that everything is accurate. And if you do know of any problems that exist on your report, just be upfront about it. If there's something that shows as a 30-day past due payment and it's just simply you forgot to make the payment, be upfront about it. We really lend on trust. So the next slide. And character kind of shows, your commitment. If you're really having a tough time, your credit report is going to show that. But if you're willing to talk to us about it and let us know what is going on, we're willing to work with you in most cases. Next slide. So the next thing is capacity, which ties pretty close to your credit report. So really, how are you going to repay the loan? What are your plans for repayment? What are your earnings from your job? And what are they going to be after we make a loan? So if it's a loan that we're making for you to grow your business, you should know what your earnings are projected to be after we help finance that growth. That will help us in our lending decision. Additionally, we like to see some history. So that would be income statements, cash flow statements, and tax returns. When you're applying for a conventional loan at Farm Credit, we typically ask for the last 2 years of your tax returns. If it's a business that has only been in operation for 1 year, we can typically be flexible, but at that point, we would be looking for projections and budgets. And another thing that we want you to think about before you come to get additional financing is what are your doors out? If your business venture doesn't work out, what are your plans to repay the debt? That's also something really important to think about. Next slide, please. We also look at collateral. So we do write secured loans. And we typically like to have real estate. It's the best collateral. It doesn't go anywhere. It doesn't deteriorate, and it's always there. But we also look at livestock, machinery and equipment, and inventory. When looking at your collateral, we're really looking at what's it really worth, and we're looking at your, the fair market value. What could we sell that for? If we had to sell that asset, what is it truly worth? Net recovery value is basically how much of the value of that asset we would expect to retain if we did have to sell it. And then additionally, again, what would it get if it was to go to auction? Next slide, please. And then capital. So we really like to see someone who has some skin in the game. Someone who has invested some of their personal assets into the business. What that really shows is how dedicated to your business you are, and that does tie right back to character again. One of the things we look at is your net worth. So that's your debt to asset ratio. So really that shows what percentage of your balance sheet is actual assets. And then how much do you own that doesn't have any debt on it? And we do ask for a balance sheet when you apply with us, which is attached right to our application. Next slide, please. Next slide. And then conditions. So this is really the terms of your loan. And it depends on what assets we're financing and what we're really, it differs between assets. So real estate, like I said before, doesn't really deteriorate. It's there for virtually forever. So we can put that on a longer term, between 10 to 30 years. Machinery and equipment, that that deteriorates and it loses its value over time. So we look to finance that maybe over 3 to 7 years to more closely align with the useful life of that asset. And then livestock is typically 1 to 3 years. Most livestock that we finance are production animals that are used in meat production or dairy, and the typical useful life of those assets is 1 to 3 years. And then inventory, we finance on less than 1 year, because you're not going to hold inventory for that long. Your goal with having that inventory is to sell it, hopefully within a year. So we won't finance that for longer than a year. And like I said, the term of your loan should be equal to or shorter than the life of the asset financed. Next slide. So this is just a funny picture I threw in, 1 more year payments, and she's all mine, basically showing that you shouldn't finance beyond the useful life of the asset, because that asset is not useful anymore. Someone took too long of a loan on that. Next slide. So how do we arrive at a decision? So again, it goes to character. We really, in our conversations, we get to know who we're lending to, and we like to know what your business is, and we like people who are open and honest. Capacity, how are you going to repay the loan? Where's this business headed? What's going to happen if this business doesn't work out? What are the fallout plans? Capital, what's your current financial position? What's your financial progress that you've shown? And where's your operation standing today? How did you get it there? Did you do it with your own money? Did you have an angel investor? Those are all things that we look at. And then collateral and conditions is how we approve our loans, basically. And those really depend on how much risk is involved. Next slide. So these are some of our turnoffs that make us really rethink our decision. So poor records, if we don't have good records on the business, we don't really know who we're lending to. We don't know what the financial standing is. High existing debt. Low credit scores. And with low credit scores, it's important to note that sometimes you have a low credit score just because you have no debt. So a low credit score to me is different than what I call a young credit score. So a young credit score would be someone who doesn't carry a lot of debt, and their score is not low because they're not paying. It's just because they don't have a lot of debt outstanding. Another turnoff is that people rely too much on collateral and don't really think of what the earnings side of the business is going to look like. Low personal investment, unrealistic expectations, no plan B. Again, what if the business doesn't work out? What if weather hurts the business or prices? And then build it and they will come business plans, which is really someone who has a dollar and a dream, hasn't really done their market research, and then lack of cooperation and commitment when times get tough. So we lend on relationships. We will continue to work with you if there's a struggle, but it's just very important to be upfront about that and communicate with us. Next slide. So some things, just tips and tricks to do before you start. Save some money, get some equity on your balance sheet, protect your credit rating, and that's a credit report website that you can use. Gain some experience, network with others in your industry so you have a really good understanding of your business and the potential. Make some plans and observe other businesses like yours around you. Next slide. So that's everything I have. Thank you very much for inviting me, and I hope you found this helpful. And if you have any questions, my email is right here on this slide. Thank you.
Thank you, Megan. That was terrific.
Peter, you're on mute.
Sorry. Thank you. Farm Service Agency is a part of USDA. USDA is a part of the federal government. Our regulations and programs come from Congress and Senate, fed back through the Ag Department. Farm Service Agency is developed to implement agricultural policy from the Congress. We administer the credit and loan decisions. That would be the FLP side of it. And the farm program side of it is to manage and work with farmers for disaster and price supports. Can I have the next, please? This is a quick map of the area of New York. Presuming, of course, you're in the Washington County, Rensselaer, Albany County area, you'd be working with the Greenwich office. As you can see, our office works from Essex County down to Suffolk County. We're on the road a fair amount. There are 8 offices throughout New York State. The double circle, I guess you would say, are teams with loan officers. The single dots are farm program offices. The differentiating part is, as I said, the farm program folks work with farmers directly on crop reporting, crop support, pricing, etc. Next, please. As I said, our house is split. We have farm loan programs and farm programs to support the farmers. Two different groups of people in the office here, but we both comprise Farm Service Agency. One of the keys to working with Farm Service Agency is when you come in to start your farm or start your loan application, you have to represent yourself the same in both entities. Quite literally, if you want to come in as an entity, as an LLC, a corporation, a partnership, you would come in and report in both offices the same. Next, please. Farm loan is as I said, our goal is to be lender of first opportunity. Unlike commercial lenders, we have reduced regulation to help with beginning farmers, farmers that are struggling. One of the paramounts of our program is that you cannot get financing elsewhere at reasonable rates and terms. As Meghan was saying earlier, there may be angel financing, there may be family financing involved in your farm business plan, or there may be people using their credit cards or another high source of credit. We can work with farmers if we're not competing with a commercial lender. Where does that come in? Well, a lot of people look at our interest rates and they say, well, I want to get a loan from you because it's so much lower. Well, that doesn't work that way. We can't offer credit to just anybody on the farm loan side. There are other opportunities for people, larger farmers, or people that can get money from other sources. I'll talk about that here in a moment. We have different types of loans for the different things that you would like to do, whether you want to buy land or start a small business, buy livestock equipment, etc. We, much like any commercial bank, we would tailor the loan for what you want to do. As I said, the Greenwich office has a large geographic area. We have right now 7 people in our office. We're looking for another, but at maximum, we're looking at 7 to 8 people in our office, but all of them can answer your questions should you call the office here in Greenwich. That would be much the same across the state of New York. Anytime you call, there are informed individuals there for you. We do place special emphasis on beginning and targeted underserved individuals. Our targeted underserved people would be Native Americans, women's. There's 7 different groups. I'm remiss right at this particular moment to talk about them. the way that our budgets are designed, we have funding for those target groups and some programs for those target groups. Next slide, please. These are our general regulations. Again, these are all designed by Congress. We can only work with a US citizen or a qualified non-citizen national. Applications for the farm loan program need to be a for-profit operation. We have had people asking for nonprofit funding where our side of the house can't fund that. Acceptable credit. Now, Meghan was speaking to, and many of your commercial banks work with what's called your credit report. We work with your credit report, but we do not fixate or work with your credit score. The difference there is if you're, as Meghan said, if you have a delinquency or if you've had something unfortunate happen, such as a medical bill that has escaped your knowledge and got into collection, we're not going to hold that necessarily against you, but we don't want to see a pattern or a history of slow payment. So you have to have a credit, acceptable credit to work with us, but not a perfect score. One of the big things is you can't be delinquent on federal debt. That does include your student loans. Right now, Congress is looking at many different programs, which I'm not up on at this particular moment, for relieving some debt for people. However, you cannot be past due. You cannot be delinquent on any federal debt. That does not include, oddly enough, IRS loans. You do have to have some training, and the training depends upon what type of loan you're working with. So again, we're to help the beginning and or the startup farm operations. You have to have some training, some experience. Our application, when you fill out our application, we try to get to know you and know what you did. Did you grow up on a farm? Are you working with a mentor? Did you work through college or a school or on-farm experience? All those are important in our programs. Next, please. Who is a beginning farmer to the USDA? Beginning farmer to the USDA is anyone who has not farmed for 10 years, regardless of your age. We've got people in their second career starting in some form of farming. If you have an entity, for those that don't understand what that means, would be an LLC or a corporation. You would all have to be beginning farmers. So any number of people that are working in that entity as a member, as an owner, would all have to be the same 10 years or less. Next, please. This is a particular loan that's geared towards a beginning farmer. It's a direct down payment loan where we're working in tandem with another source of funding. Now, this is a person, whether a beginning farmer, a beginning farmer, excuse me, coming in, they don't have enough money to go down on a farm property. We call it a farm ownership loan. The requirement for a beginning farmer down payment loan is the borrower would have to have a 5% cash down payment. A bank would supply, or an individual, an entity would have to supply 50% in this case, and we would provide 45%. Again, we're limited congressionally how much we can lend. So in this case, our top out number is 300,000 roughly. So in this example, you would be purchasing a farm of 600,000 or more. Where I say more is if it's more, 700,000, 800,000. We can only top out at 300, and the private individual or the lender would have to pick up the rest. But the basis is you're only 5% down requirement on this, as opposed to commercial lenders, which will get 20 or 30% down in some cases. Our interest rate here is 1.5. Again, that's congressionally fixed for the life of the loan. So you can see why people are interested in working with FSA. However, the maximum term on this loan is mandated again congressionally at 20 years. Next, please. These are other types of loans that are open to most anyone that we work with. A farm operating loan is anywhere from 1 year to 7 years. That would be a purchase of a piece of equipment or 1 year's operating needs. If you were just starting out and you needed money for fertilizer, seed, rental of equipment, again, that would be a 1 year term loan. It would be paid back when you harvested your crop. 7 years maximum. Our total maximum available is 400. The interest rates, again, are fixed on our operating and our farm ownership loans, but they're fixed upon getting approval of the loan. Right now, we're at 2.375, I believe, on an operating loan. Again, that's fixed for the life of the loan. Farm ownership loans are up to 600,000. Now that would be, the one I spoke of before was a down payment loan, but it was a farm ownership loan. This is a direct farm ownership loan of up to 600,000. We will and can term it out to 40 years, but we always start at 20 years to see where you can cash flow. So we try to match the term. You never want to be paying too much interest, even though we're low interest. So you would want to term the loan for your capacity, your debt repayment capacity. The requirement for a farm ownership loan, as you can see on here, is a minimum of 3 years business experience managing a farm. For an operating loan, it's a minimum of 1 year's experience operating a farm. Next, please. A microloan gives us more latitude. A microloan is 50,000 or less, either in a farm ownership or in an operating. Now, you can get a farm ownership loan of 50,000 and an operating loan of 50,000, thereby making it 100,000. So we can differentiate. In that case, you would be maybe making some modifications on a leased farm and purchasing your inputs on that farm. This one is nice for a beginning farmer because on the bullet point on the bottom, we can use a mentor to replace the 1 year's minimum experience. So if you have a mentor working with you on a day-to-day or week-by-week basis, you're allowed to do a microloan, again, up to 50,000 in this case, because it's only the operating side that we can work that with. The security requirements, the collateral for this type of a loan is also relaxed in comparison with our other loans. This one is pretty much dollar for dollar. So if we borrowed 50,000, we'd be able to loan to you with 50,000 in collateral. Next, please. These are just a couple other loans. Joint financing would be much like the first one I spoke of, where you would have a angel financing, family member financing, or a commercial bank financing. Again, you'll notice that this one is locked in at 2.5 congressionally. We're allowed on this one to amortize it over a longer period of time than the 20 years. The youth loan is designed for, quite honestly, anyone that wants to start a small farm project It's $5,000 maximum. Your age can be anywhere from 10 to 20 years old. It says 21, but we have to close the loan and you got to start repaying it. So I really say 20 years old. Again, it's a small project. It's designed for younger people or people that are starting up in that age group that may have a small capital project that they're looking to do. This one does require an advisor or a mentor also. The mentor can be another farmer in the area if that's an individual that you choose. Next, please. This is a slide of what you would be required to bring to us. Again, we are a beginning farm banking operation here. So it doesn't have to be as an accountant formula. You can bring this in your own business plan. But starting out your business structure. Your business structure would be if it's going to be yourself alone doing the financing, maybe husband and wife, maybe partners. As I said earlier, your structure has to be reported the same both in the farm program side and the farm loan side. That's important because it's required congressionally for us. You'd want to come in and know your education, your training, your farm experience. You'd be able to write. It doesn't take a lot of writing for this. It just can be done in bullet point fashion. Your business plan, much like any bank, you're going to need to come in and show us that you've done some research on number of poultry you're going to grow, amount of acres of vegetables you're going to grow, what the typical plan is, not what you think you can get, the maximum you can get to make the loan work. You really want to do some work to get this plan together. Again, the amount and the purpose of the loan, the financial and the production data, depending upon the type of loan you're asking for, all these bullet points change. What do I mean by that? If you're looking for an operating loan, a microloan, we require 1 year's business experience or production and financial data showing what you are going to do in the next year if you're coming in with a mentor. As opposed to an FO loan, you would need 3 years worth of financial data and production data. Again, we're designed for beginning farmers. So you don't have to have the best, but we do want good record-keeping system. Next, please. We're required, again, as I said, I keep coming back to Congress writes our rules. So we are designed as a progressive credit. What does that mean? We can work with beginning or people that are struggling, but we have a mandatory shelf life that you have to graduate from working with us to commercial credit. Our design is to help you improve your record keeping, moving you from the beginning stages of record keeping to good bookkeeping that you can go to a commercial bank with and show you how you've progressed. Environmental compliance, we refer to it as NEPA. Your project, you have to understand the implications of your project on the environment. So if you came in and you were looking to build run-in sheds for your beef or poultry, again, you would have to have plans. Bring us those plans, what kind of environmentally sensitive area you're going to be in. This is where we partner with the other agencies in USDA, such as NRCS and farm programs, to make sure that you're in environmentally sound area you could be working in. Next, please. Farm programs, I'm only going to do very briefly on. By virtue of the fact that farm programs, you're working with the other side of our house. In this office, it would be Dave, Hulk, Keisha, Patty, Joanne. They work with the farmer individually on specific areas, price support programs, disaster programs, conservation compliance programs, and of course, eligibility. The eligibility comes back around for both agencies, both offices, farm program and farm loans. Next, please. Farm programs has a product which we normally pair with. What do I mean by that? Farm storage facility loans is a program run out of farm programs, the other side of our office. We do all the analysis for them. They have a specific, congressionally, again, written set of rules that they can work with. They are allowed to work with farms of any size and farms that can get credit, commercial credit elsewhere. They can also work with nonprofits. The farm storage facility loans are quite literally, as you can see in the picture there, a bulk tank, trucks, etc. Next slide, please. This is a list of commodities that you can produce and work and request a farm storage facility loan. Again, it's not one or the other. You can have a farm storage facility loan and an FLP loan or a farm loan from us to accomplish your project. So a lot of times when you come in and you tell us what you want to do, we can help you work through it. So again, the commodities are quite extensive. There's only a very few in the state of New York that we can't do. Next, please. Here's some uses for the farm storage facility loans. The hauling trucks, whether it is a truck for farm to market, refrigeration trucks, actually the refrigerators or freezers if you're doing meat, on-farm distribution, pole barns. Forgive me, typo on the bottom there. It's silos, not sailors or silos or whatever. We can work with the raw product for maple, the sap tanks, but this is where our rules and regulations come in. We can't work with finished product, the maple syrup. Next, please. FSFL requirements are different than the farm loan requirements. They can loan a separate $500,000 on a loan request. The rules are different. Also, you're required to put 15% down on a $50,000 loan or greater. On an FLP loan, we don't necessarily require you to have a down payment. If you're looking for a tractor, we don't require you to have a down payment, but we require you to have adequate collateral. This one requires a down payment. Again, environmental compliance is big, whether you work with farm program or farm loan, we all have to comply with environmental regulations. Next, please. You can work with your USDA. Recently, we started this website, www.farmers.gov. Helps you locate your farm in your neighborhood, or I'm sorry, helps you locate the office in your neighborhood. It also has all of our forms and documents on it, and it goes into more detail on the loans and the programs. To work with a farm lending team, you have to first go in and remember to register your farm with a farm program team. Now, again, I've spoken briefly on our direct lending. As Meghan alluded to, we do also do guaranteed lending, where we work with the bank. Now, we've had people ask for guaranteed loans. That's a misnomer. You really need to call and work with a commercial lender first, and then they will ask us to guarantee the loan. That allows the commercial lenders to graduate between FSA and their regulations. We step in and help secure your loan, or yes, we underwrite your loan to some degree so that the commercial lenders can work with a struggling or a startup operation. Again, to get a guaranteed loan, you would first be working with the ag lender of your choice. Next, please. Again, you can get us on www.farmers.gov or USDA Gov subscription. Thank you.
Thank you, Peter. I learned a lot from that.
Hello, I'm Mary Ann Johnson. I'm with Hudson Valley AgriBusiness Development Corporation. We are a nonprofit that was founded in 2007 with the idea that farm-related and farm-dependent businesses needed a support network that that the county economic development offices weren't necessarily offering to farms and agriculture and local food businesses. You can go to the next slide, please. We work directly to enhance, economic development in the Hudson Valley by working with agricultural entrepreneurs, local food businesses. Early on, we realized that our farms had products that were sold to folks who were then making some value-added products out of them, whether it was the farm themselves or others, and those businesses could also benefit from our the work that we do. Go to the next slide. So we do serve production agriculture, and we do from, we call it the little A to the big A, from the small scale farmers to some of our bigger farmers here in the Hudson Valley. We do not discriminate. Everyone is welcome to give us a call and talk to us. We work with value-added food producers, craft beverages, became a pretty big thing in the past, 5-7 years. Energy, alternative energy, sustainable forestry, ecotourism, agritourism. Hudson Valley, as I'm sure you're all well aware, we draw a lot of people into the area for many reasons, and agritourism is one of them. So you can see it's a pretty diverse group of businesses that are able to come and talk to us. And if you don't fit into any of those categories, we will still talk to you regardless. Next slide, please. We do run several programs. I'm mainly here tonight to talk to you about our incubator Without Walls, but I just want to make you, briefly aware of some other things that we do. We do have a website called Hudson Valley Bounty. It started out originally as a business-to-business network for farmers and chefs. It then quickly became very popular with consumers, and so it's free for businesses to list to get into the network. And then it's a searchable database. So if people are looking for pick your own or strawberry jam or, a craft beverage, those things are all searchable. You can search by area and it will point them to your business. Feed HV is a community food rescue network where we match up donors with a volunteer who will then pick up the donation and drive it to one of our feeding agencies. That operates in 7 counties, basically Columbia, Greene, south to Orange and Putnam and Sullivan. We've rescued at this point, I think it's well over 300,000 pounds of food in the past couple of years. So it is an option for some of our farms or our local food businesses who do maybe have some excess and they want to donate it. They're able to contact us and we're able to make that happen. We also do loans. I know we've heard a lot about loans tonight, so I'm not gonna, go in a whole lot of detail here, other than to say we tend to be an alternative lender that fills in a gap. So if you're doing a project and maybe you've got some money from Farm Credit East, but you're a little short of fulfilling your project, people then tend to come to us. Our loans are generally for equipment and working capital. We're not doing real estate at this moment in time, but perhaps we will get there down the line. So all of the things that both Peter and Meghan said are all true or basically true of HVADC. You know, it is a loan, and at the end of the day, you know, whoever you get your money from is looking for it to be repaid, however they go about it. Can go on to the next slide. So the Incubator Without Walls program is a program we started with in 2007 with the idea that businesses, our agribusinesses, needed some support in a wide variety of areas. And you've heard the previous speakers talk about your business plan. Critical to have your business plan, whether you're going for a loan or not. It just gives you the guidance, it gives you the support, and it gives you the confidence to do your business. We can do strategic planning. So maybe you're already in business, but you want to add a product, or you want to, start doing agritourism events, all sorts of things. So we can help with strategic planning on that end. Marketing and promotion. It's critical as you are selling your products. You know who your customers are. You have a strategy to reach them, and we can help you with those strategies. Project planning, very similar to strategic planning. Matchmaking services. For example, you have a product that you are trying to move somewhere. Maybe you have some excess of. We had a cheese maker up in Washington County that had some cheese that they were trying to sell, and we were able to match them up with a business in Kingston, and they had a successful back and forth. We can help with food safety certification. We are currently assisting the Hudson Mohawk RC&D with those grown and certified producer grants. And so we're helping to make sure that people can, get through the process of GAP certification so that they can achieve grown and certified when they're ready. And if you are looking for alternative money and you need some help with grant writing, we do have some grant writers that we work with the caveat that grant money is not free money, and we should not mistake it for free money. But if you are interested, we can have a conversation about that. We do help with farm transfer and land access and product diversification. But when it comes down to maybe you have a production question, we're going to refer you to Coldwell Cooperative Extension. We try to stay on the business side of your enterprise, and if you have a production question, we do try to steer you to someone else. Since we've started, we've helped over 270 businesses, and we are, as Janet mentioned, part of the American Farmland Trust Regional Navigator Network, and so we're happy to be here tonight. So thank you, Janet, for inviting us. Go to the next slide. So I don't know how many folks on the call are looking for land, but we can help you, whether you're a startup or whether you're an existing business, looking to grow. One of the things that I think Peter mentioned was your business structure. So we can provide, legal assistance if you're deciding on whether you want to be a sole proprietor or, an LLC, etc. So we can help with that. I mentioned helping with business planning. The other folks also talked about having some financial projections. Again, that's critical not only for the loan, but also to help you manage your business. So you don't get into a situation where you are short on cash and I'm sure Peter and Meghan don't want the panic phone call of, hey, we need a loan right away. We can help with succession planning. You can see some of the quotes here from Zach Metzger at Laughing Earth Farm. We did help him, and he worked with one of our consultants, Jerry Cosgrove, to help get his land, do an easement, and Zach and Annie are now successfully farming, and we're really happy to help them. Our other example here from Max Morningstar. Max had a pretty heavy retail business, or excuse me, wholesale business. He realized that, you know, that wasn't working out the way they had hoped, and so Max was able to work with one of our other business planning consultants to kind of crunch through the numbers, run through some scenarios. He changed his business model. He was able to purchase his property, and again, he's another person who's doing great. Just want to emphasize that none of this happens overnight. It takes some time. It takes some planning. HVADC can be there to help coach you through each of those stages, and hopefully get you to that spot where maybe it is time for you to get a loan and you know, do an expansion. We recently did a panel on succession planning for farmers down in Orange County. It is available on our website. We did record it as well, Janet. It's a brilliant thing to record. And, you know, we had experts, we had legal experts, you know, there talking. We had folks from the Orange County Land Trust to talk about how they could help. And the whole point that everyone drove home in that, and I, again, like to drive home here, is that this stuff needs some planning, and it does take time, and you're better off getting started sooner rather than later when you've hit some sort of like emergency situation. And we're always happy to jump in emergency situations, but if you can, you know, plan ahead a little bit, you'll be in a much better position. And for my last slide, that's how you can contact us. If you want to take a look at other examples of how we have helped clients, we do have a newsletter that goes out monthly, and we try to highlight a couple of clients in each one of those, so you can kind of read through their stories and see the things we do. My contact information is there. Feel free to call me or email me. I was happy to talk with folks. And thank you for your time tonight. Appreciate it.
Marianne, can I ask you a quick question? This is Janet.
Sure, Janet. Shoot.
Would you be the folks to go to, or one of the organizations, for someone who's really just starting out, like hasn't developed any kind of business plan yet? Would you be a first stop?
We are happy to talk with folks who are just starting out and talk about how to put a business plan together and thinking through all the things that you kind of need to think through at that point.
Okay, great. Thank you.
No, you're welcome. Thank you.
Hello, everybody. It's nice to be here, and thanks for having me. It's really cool to see how these different organizations all fit together well. So I'm Raya Carr with Iroquois Valley Farmland REIT. I'm a relationship manager here, and we are a real estate investment trust that has several hundred investors, and that portfolio, or they invest in a diverse portfolio of farmers in the northeast and around the country. Next slide. This is just a little agenda. I'm going to go over the different kinds of investments we do, a little bit about how to do that, and partnerships. Next slide. So as I said, we're a real estate investment trust. This does limit the kinds of deals we can do in certain states. We are able to offer all of our products in most states, but just a heads up from the beginning that there are a few states in the Midwest and further west that we cannot work in because of anti-corporate ownership laws, but that hasn't really come up in the Northeast. So I think for this presentation, we're all good. So we are a public benefit corporation, and our investors are looking at triple bottom line impact. That's social and environmental and financial returns. Next slide. So how do we do that? Well, we basically connect investors that want to see a positive impact on food, agriculture, stewardship of land with farmers that are doing that work. So we try to have an equitable relationship between the farmers and investors. The one can't really be there without the other. The farmers are identifying the properties. They are the ones that are generating revenue. And then, they need a source of capital. So that's where the investors come in. And we are unique in that we do work exclusively with organic farmers. And how we define that is if you have an organic mentality, you don't use chemicals, and you're farming holistically and interested in certifying, yeah, we can work with you. It doesn't mean you have to necessarily have every product on your farm already certified. It's more about where you're headed in the future, and that you're going to have that impact that our investors have shown they value of organic and regenerative farming. Next slide. This is just cool to see where our company has been in the country. So our founders are from Illinois, and we started most heavily in Illinois and Indiana. The company is actually named after Iroquois County, which is where the first organic farm was invested in. We've been around since 2007, and our first several years, we just purchased land and then leased it to farmers with an option to buy later. So you'll see when you look at our portfolio breakdown that we have the highest percentage of leases. That being said, once we started offering financing, that is mortgages and lines of credit, that's become increasingly popular. And we have a mixture of different kinds of farmers we work with. So we're not just working with grain producers or livestock producers. It's a whole gamut of farmers. Next slide. And if you want to explore on our website, we have a really great web page that has the stories of several of the farmers we've worked with in the past several years, specific examples of the kinds of investment that Iroquois Valley has done. That's actually how I joined Iroquois Valley. Is my family's livestock farm was their first mortgage deal. And so before I worked at Iroquois Valley, I kind of saw what it was like to be a customer of the company and a borrower from my family's perspective. But that's okay, go ahead to the next slide. So our products, well, as I mentioned, we started doing leases. We've been doing these since 2007. And we also offer mortgages, so that can be for purchasing a farm, or it can be refinancing a farm you already have. That's actually, that's really unique, being able to do a cash out refinance, because it can be, especially if you don't have a conventional operation, it can be hard to get a lender that's comfortable with loaning against the value of your property in that situation. Operating lines of credit, we started those about 3 years ago now, and they do tend to work in tandem with either a lease or a mortgage. They were originally designed to be an additional tool for the farmers that we have real estate investments in. We are a real estate investment trust, so that's our focus. Next slide. So how do the leases work? Well, for starters, there's two different kinds. There's some similarities. Both of these lease options, it's like Iroquois Valley is going to buy the property and then the farmer would lease it back from Iroquois Valley. We have the ultimate goal of the farm ending up in the farmer's hand. So, you know, the idea is to build equity and to be able to purchase the farm at a later date. That's not written in as a term, but we go forward with that as an intent in the future. So for crop rotations, you're generally secured with crop insurance. And that's why you'll see the lease rate based on the acquisition value of the farm is going to be a little different than diversified operations. They're oftentimes you don't have the availability of that kind of level of insurance. There are increasing numbers of different kinds of insurance that may actually help diversified operations, whole farm insurance or pasture insurance, which we've been seeing more and more pop up as options. But you'll see that the row crop farming model has a twice-a-year payment schedule that's based on harvest, basically. And the diversified operation is more of a monthly payment schedule. You'll also see that the rent is a little bit different. The crop farms have a variable rent structure, and that is based on how grain prices fluctuate, and you might have a year where you have a really good return, and variable rent is a third of the amount that your revenue exceeds 3 times the base rent. And I have to just like read that several times over, and then it eventually makes sense because it's a little bit complicated. But with the diversified operations, there isn't variable rent, but it's a higher flat rate. Diversified operations, as I've seen it in our portfolio so far, they tend to be direct marketing companies. Not to say that there's so many different kinds of farms, who knows what we'll run into. And that's a great segue to say that these are somewhat customizable. This is just the basics of, the general structure we usually use or start from as we customize a product for the specific farmer we're working with. Next slide. So I've separated the financing into the mortgage and the line of credit terms. The mortgages are on a 10-year loan term. They have a first 1 through 5 years period that's interest only. That is made to be able to enable working capital to be freed up from the cash flow of the farm. So there's no prepayment penalty. If things are going really well in years 1 through 5, that's great. You can pay down as much as you want on the principal without any fees. But that's made so there's the option of paying the lowest possible monthly payment. Years 6 through 10, you're going to start amortizing the principal on a schedule that spreads it out as if the loan was 25 years. So we don't have as long of loans as, say, farm credit or the FSA, but we do have an option to renew or refinance. So these are basically made to have these checkpoints at years 5, at years 10, where we'll see how your finances are going and possibly renew the loan. It's not just like this trajectory and then the end and then everything explodes. We really try to keep in touch with our farmers and be proactive and figure out how we can work together every step of the way. So something important to note about the mortgage is there's a 75% loan to value target. So that usually means a substantial down payment if it's purchase financing, which is why that the leases sometimes work better. Because if you want to farm a property, but you don't have, a substantial amount of savings, you could start with a lease and then save up to potentially buy the property later. If this is a refinance, that's less applicable, because if you already own the property, it'll be more about covering the debt you already have in the property. Next slide, please. And with the lines of credit, I kind of already mentioned that they go along with the other two products, the mortgages and the leases. They are shorter loans, and again, very customizable. They're going to be using real estate, receivables, inventory, crop insurance, livestock. There's different options of what can be serving as collateral for these loans. They're going to be on a monthly payment schedule, and they're going to mature sometime between 1 and 3 years, depending on the situation. Next slide. So for our application process, you'd be talking with myself or one of our other relationship managers to see if there's a good fit and it would make sense to apply. We talk about any strategic partners, which might be some of the other speakers at this this event, actually. And then the first documents that we would need would just be our farmer questionnaire, which is a 2-page form with pretty basic information, and some financial and business planning information to get a sense, again, if it'll be a good fit. After we get this initial information, we'll be in a place where we can invite you to apply and get a full underwriting. We see a lot of potential. Or we might suggest, we might refer you to somebody else that we feel like would be a better fit if it's not, if there's questions of experience level, or if you're not as focused on organic. So then once you get to the full underwriting, that's when we get all the details, the application fee, which is $400, your balance sheet and income statement, detailed cash flow projections, and the property information and appraisal. Being a real estate investment trust, we're really focused on the valuation of the property, that being competitive. We are sensitive, to each individual situation and the specific value that a farm might have to, those around it that have roots in the area. Like, it's not to say we have to exactly match the appraisal if there's special value that it doesn't quantify, but we try to stay fairly close to the appraisal. And yeah, I mean, that's when any follow-up questions would come, specific things, particular to the situation. Next slide. So when I talked about partnerships and resources that we work in tandem with, one of them is Food Finance Institute. We currently have a grant with them where we can refer farmers to their program and work together and get discounted or free financial and business planning assistance. This is great if you're like in the middle or starting out on the application process with us and wanting to make sure you really optimize your business plan, your cash flow projections, make sure those are going to be organized strategically and accurate and all those good things. Next slide. And then it was great to hear from Peter Elmer, because this fits in really well with that. So we can be that private lender that works with the FSA on the beginning farmer and rancher ownership loans. We've done this several times and it works really well for us, and it gets you the best possible rate if you're eligible for that program. This does not apply to the guaranteed programs. Also, land trusts. We have worked with the Maine Farmland Trust and Iowa Natural Heritage Foundation. And we have also worked with ASA. That should be on here. I am so sorry, because we worked with them here in New York as well. So next slide, please. Oh, here they are. Here's the essay on this slide. So how it works with the land trust is it can be so much better for a farm to not have to pay a development premium on the land. It can make your cash flows pencil out to have a land trust partner that can buy the development rights. And we've just seen time and time again that make a huge positive impact on our farms, to the point that any new farmer conversation, we tend to ask the question, is there a land trust you could work with? Would that help? Because whenever it is possible, it tends to be a good thing to consider. Next slide. So the closing process and just this whole process I discussed takes a while. We're a small company and we really take these investments into a lot of detailed analysis. We usually say it takes about 3 months from start to finish. Part of that is waiting for the appraisal if it hasn't already been done. And another part of that is the closing process. So this is when we're drafting the mortgage documents, if there's a line of credit, those documents, the lease agreement, all those things. There's a lot of back and forth. We have to work with our lawyer on those docs, and there's generally about 4 to 6 weeks. Sometimes it's faster, but I'd always like to under promise and over deliver. There's also fees associated with closing, which is good to think about from the beginning of the process to make sure you're budgeting those in. And then what's it like to be a farmer in the portfolio? Well, as you see, we market the farms we work with on our website. We'll cross promote through newsletters. As I said, we have several hundred impact investors that are shareholders at Iroquois Valley. So they're on a mailing list, as are other partners and contacts. And it can be a great opportunity to be featured in a newsletter. It's really symbiotic. You know, it's good for Iroquois Valley and showing our partnership with farmers, and it can be good for the farmer to get more exposure and sending people to your website. A couple other things to mention is we ask for financials every year, and we check in about your soil health practices, your organic certification, where you are in that process if you're transitional. And then we also have a grant program that we do every year, which is exclusively for farmers that we work with, and it's from $500 to $8,000. It's called our soil restoration pool, and it comes from a percentage of the the debt investments that our investors offer. And I think that's pretty much all I have. Is that my last slide? Or oh, so here's my contact information and Iroquois Valley's website. Again, thank you so much for having me, Agricultural Stewardship Alliance, and all of the folks on this call. Happy to answer any questions you might have.
Great. Thanks so much, Raya, and to all our presenters. A lot of great information. Does anyone have a question that they'd like to pose? You could unmute and ask it now if you'd like to.
No question right off the top, but just a thank you from those in this audience. Yeah, I kind of fit in the new farmer, veteran farmer, and just, yeah, really helpful information. So I know we didn't have a huge audience, but for me alone, it was hugely valuable. So thank you for everyone who took time to present.
Great, thank you.
That's so nice to hear. Yeah, I actually have a question for Peter. I was wondering, so sometimes I hear farmers, at least here in Illinois, and I think it's kind of a recurrent theme, ask about, oh, if my local FSA office is busy, can I go to a different office? And I have heard that that's possible, but I'm just wondering if there's any, like, at what point is that a bad idea or might rub people the wrong way? Could you kind of like shop around for the FSA office that's most like the best fit for you, or is it really best to try to stick it out and work with the one closest to you geographically?
Good question. I would go on by saying right now, you probably remember that picture of our geographic area that we cover, and we have 3 loan officers right now working with 6 loans apiece. So that makes a rather large onslaught of work. So to improve our customer service, we've moved to other offices in New York the new requests for borrowers. So to answer your question, we have serviced out our loans to improve our handling and our customer service for them. Much like what Meghan said, it is a kind of a relationship lending situation where the loan officers get to know the borrower, get to know what their plans are. Maybe the borrower might not want to hear the "not today" speech, but we can look at it next year for you. So I would suggest that they continue to work with the local office as much as possible. But I will tell you that yes, most of the offices in New York do try to provide the best service by moving it to other offices when necessary for better or improved customer service.
That's helpful to hear. Thanks, Peter.
Anyone else have a question or a comment? Well, we timed that pretty well. It's just a minute or two after 8. I want to thank all of our presenters so much for taking time out of their evening to give all this great information. And we will be sharing the recording, so it should reach many more people. And thanks to Laura for setting up the Zoom and the slideshow and handling all of that. I really appreciate that. And to all of our participants, contact these organizations and contact us at ASA. We're happy to talk to you and help in any way. So thanks again, and hope you all have a good rest of the evening.
Thank you
Thank
for
you,
the
Brandon.
invite.
Have a good night, everyone.